Welcome to the Tech Talks Daily Podcast, where you can learn and be inspired by real-world examples of how technology is transforming businesses and reshaping industries in a language everyone can understand. Here is your host, Neil C. Hughes.
Welcome back to the Tech Talks Daily Podcast, where every day I try to get a guest on from the world of tech that teaches me, your friendly host, and hopefully everybody listening in 165 different countries, a few lessons about emerging technologies and how it's transforming our world. And anyone that follows world news will know that we are fiercely protective of the National Health Service, the NHS here in the UK. And in a nutshell, anyone, no matter what their background or financial status, will receive healthcare without any additional cost or need for insurance policies, because it all comes out of something called national insurance, which is just taken out of your wage slip. So there's a lot of talk at the moment about the NHS struggling to cope, and eventually it's going to have to adopt a system like the US healthcare. But of course, protecting vulnerable members of our society, nobody's going to want that to happen. And having a free healthcare for all is something that nobody's going to want to give up. But the US healthcare system is one that I've tried many times to understand, but I simply don't get it. And I think that's because I've had a few friends over in the US that's contacted me talking about a few big bills that they've received at the end of their treatment, even though they were fully insured. So I wanted to learn more about that. But also, with technology revolutionizing the healthcare industry with continuous advancements and procedures in the operating room, I also wanted to explore how it's influencing the payment side of things too. So Health Payment System, HPS, is a Milwaukee-based company that has major plans for expansion in 2020 and is also enhancing the healthcare billing experience for consumers, employers and providers. So Terry Rowinski is going to join me today to talk about the emerging healthcare technology scene and also provide insights on how emerging healthcare technology trends can actually enhance the patient experience through improved payment processes. So I invite you all to meet me in Milwaukee, where Terry is waiting to speak with us about emerging health tech and so much more. So a massive warm welcome to the show. Can you tell the listeners a little about who you are and what you do?
Sure. Thank you, Neil, and thank you for having me on today. So my name is Terry Rowinski, and I'm privileged to be the organizational leader for a company by the name of Health Payment Systems here in Milwaukee, Wisconsin, in the States. As a part of my role responsibility, I really consider myself to be the head coach, of our team. So not just an organizational leader, but I'm kind of the guy that helps motivate. I'll say obstacle maneuver, not necessarily knock them down for people, but help them get around them, and just overall coach of all the folks on our team here. And I've considered myself to be kind of a tech ops guy. I spent my career on the technology services side, doing projects and working with companies that help other people, be better at what they do and understand what they're doing.
And it's my understanding that health payment systems exist to eliminate healthcare billing confusion by actually offering the ability to consolidate a consumer's healthcare bills and EOB into a single statement. But as we have listeners all over the world with a variety of different healthcare systems in place, I've got to ask, can you tell me more about who your customers are and how you're helping them?
Sure. And given the world audience in terms of what we're doing, if they don't have an understanding, the U.S. healthcare system is a bit of a mess. And we have a lot of competing interests for money, of all things, as we're trying to do things like take care of people and keep them healthy. So HPS, we offer a credit card-like statement for healthcare, Neil, that really was forged from a business concept back in 2005. Of a founder, that basically had an incredibly nasty bout with healthcare. And he was working in credit card law for some of the banks here in the States. And when he returned home after an incredible bout of medical services, came home to a pile of mail on a dining room table and basically looked at this and said, holy moly, what a mess we have here. There has to be a better way to try and help a consumer understand who they owe money to, why they owe them the money, and then how to pay it. And that was really the inception of the company from an idea perspective, where he basically came up with a concept and said, let's create a credit card-like statement for healthcare. So what we do is that we have the independent providers, so the doctors, the major healthcare systems. Those are individuals who are one of our customers in the marketplace. We have employer groups, so people who are running companies that wish to provide healthcare for their employees and all of their dependents. And then we have the ultimate, the member, the person receiving healthcare and their families or those that they're responsible for, that are all our customer in this mess that we try and bring together to help put the customer, the consumer, back in the center and give them an enabling tool and technologies to help them just understand after the point of care why they owe money and how they effectively and efficiently pay.
And it is such a complicated subject, especially from someone living in the UK here. And obviously we can just go to the hospital and there's no bills. Everything's kind of included. For how much longer? Who knows? Because I think we are getting closer to heading towards a US-style system. But I had a friend, for example, who had pancreatitis, and I think he had all the insurance, had everything in place, no problem there. But he still ended up with a $20,000 bill at the end of it all, which I just cannot get my head around. Just to get everyone listening on the same page, can you possibly help me understand that? And also tell me a little bit more about the very basics of stop-loss insurance.
Oh, sure. So you unfortunately have highlighted a really, unfortunately, rudimentary problem. And I think in almost all the medical systems where individuals end up somewhat being surprised by what they owe, even though they think that their insurance is covered because either their employer is covering it for them or they're actually paying money to their employer to cover it for them. So this is where the industry really of how this mess takes place today has really gotten out of control, especially here in the States. So in the world in which we live, there's really a couple different types of insurance. There's something called fully insured companies, where a company or an employer like Health Payment Systems pays an insurance company to offer its employees benefits and healthcare benefits. And under a fully insured plan, the essential insurance company is pooling risk of lots of companies together to try and drive a larger path of who they're covering and essentially playing the law of numbers and averages in terms of what they charge people for insurance. But then that company, that insurance company per se, rides the medical risk. So if all the employers have a really bad year, then ultimately what ends up happening is that insurance company will likely pay out more than what it's taking in premiums and have a loss. If the employers and their employees and their families are having a good medical year, then the insurance company looks to gain. And that's really how the fully insured space works. There's also something called self-funding, Neil, which is basically where a employer basically has its own pool, being its employees and their dependents, and it's riding 100% of the risk itself. And I really prefer to call that more partially self-funded, because ultimately what employers should do, to your initial question, is put stop-loss insurance on top of that. And stop-loss insurance is basically a concept where a employer that is riding its own medical risk. So if Health Payment Systems said, forget about going on the fully insured space, we're going to only, worry about ourselves, and we're going to pay for medical events as they happen. Then there's something called stop-loss insurance, which sits above it, which is almost like an insurance policy on top of our own insurance policy, so that if we hit certain instances of healthcare or certain levels, that essentially we're not going to go ourselves bankrupt because we can't afford the entire medical bill. So it's really complicated. And as insurance is, those are the things that you pay for that you hope you never have to use. Stop loss insurance is almost a necessity for any company that self-funds, because as could happen in a larger pool under a fully insured program, one or two major medical events in a small company could totally and catastrophically hurt an employer's ability to keep going because of the amount of money that they would owe.
Wow, it really is incredibly complicated. And of course, all that is the last kind of thing you want to navigate if you were to suddenly be taken ill, isn't it?
Very much so. And both from the employer perspective and from the employee perspective. The employer wants their team at work and engaged and doing great things to help them grow and give people great lives. The last thing they want is for their folks to be, held up at a hospital or at home that's ill. And then on top of that, having them have the mental stress of wondering how to actually pay for their health care. So this is where this industry of insurance on top of insurance, while unfortunately somewhat necessary, has just ended up layering so much cost upon cost that ends up just costing the economy so much in what's going on.
So how do you know when to encourage your clients to use level funding and reduce costs with those self-funded plans?
Yeah, great question. So when companies become of large enough size, and our portfolio of people who participate with HPS are all over the board. We have companies that are as small as 5 to 10 individuals that are within them, to companies that are as large as 8,000 employees. When companies hit a certain size, around 50 to 100 employees, that risk pool that we just talked about earlier becomes large enough that they can look at level funding and self-funding of their employee benefit plan. And it's really because of the law of averages. As you grow your risk pool, the ability to withstand a major event within an employee's life, and I'm not talking things like a baby happening and stuff. Those are normal medical events, although for all of us that have babies, it's a big one. But I'm talking about major things like cancers and other things that happen that just cost hundreds and thousands or even $1 million plus. So as employers grow along that continuum and get into the 50 to 100 employee range, then they start to look to be viable to actually self-fund or level fund. And level funding is different than self-funding in really one really key way. Level funding is that an employer is basically almost like being fully insured, paying a constant amount on a monthly basis for their insurance, but there's an opportunity that they could end up gaining some of that back at the end of the year should they not utilize that total insurance portfolio that they built up. Where self-funding is on a monthly basis, your employees consume healthcare, the employer owes so much, and you write a check, which could variabilize itself month on month within the calendar year. So it really depends on what the employer's appetite is when they look at going on their own for health insurance, whether they wish to have a continuous known entity on a monthly basis that they pay, or if they're willing to ride it up and down on a monthly basis as their medical costs go up and down with their employees' activities.
And I cannot thank you enough for taking the time to come on here and patiently explain how all that works to an international audience, because it is quite baffling outside of the US and something I know you guys are all too familiar with. But this is a tech show, and one of the reasons I invited you on was to explore how technology is actually revolutionizing that same healthcare industry with continuous advancements and procedures in the operating room, but also how it's influencing the payment side of things. I mean, is that something you can expand on?
Yeah, most certainly. So, the payment side of things is almost been the afterthought of the entire industry. And the reason for that is that back in the 80s and the early 90s here in the States, employers would pay for their employees' health care as a part of their benefit program, and the employees had very little out of pocket. So there wasn't much attention paid to what the employee actually owed to the healthcare provider, to the healthcare system, because the employer was the one that was majorly on the hook. And the system had one, for lack of better, less participant in it, being the person receiving healthcare. But as healthcare costs continue to rise, and there's many reasons why people think that they did. Some I think are just malarkey and some are true. But as healthcare costs continue to rise, employers needed to start to share that responsibility with the employee and their family in terms of the employee and their family owning more of the responsibility for their health care. But the industry, so the providers and the healthcare systems and the folks that make all the software and the technologies that are utilized, so EHRs and EMRs, so electronic health records, electronic medical record companies, they really kind of forgot that back end of what takes place. Their focus has been on getting patients in the door, tracking them while they're in the institution and understanding what their health outcome was, but not worried about the financial side very much. So that's really where, when we came to fruition back in the early 2000s, we saw that as something that was developing and as a reason as to why people need to start to pay attention to the payment side of things more than what they were.
And as someone that's working right in the heart of this space, I'm curious, what kind of emerging healthcare technology trends are you seeing at the moment?
Oh, there are just some fantastic things, and I'm really excited for this industry. So I've really only been in healthcare, quote unquote, for 5 years, and before that, I was an owner of an internet, an e-tail company, and a number of other great career legs. So this has been quite the indoctrination by fire, per se, of understanding healthcare. But technology is advancing at such a pace that the things that really excite me are telehealth, first and foremost. So the ability to reach people where they are at. And I'm really excited for that because I believe that through digital means, much like we're having this conversation today and utilizing video, you could really bring primary care and even more importantly, mental health care to people where they are, and not having them have to leave their office, their homes, whatever the case happens to be. So telehealth is one that I'm just really, very, very excited about. The world has been very excited about, the Internet of Things and technology-based devices. And as I look at the local teaching hospitals here in the States, the investments that are being made on new ways to monitor people's health and wellness and well-being, things that go beyond the watch and wearable devices that are commonplace that consumers can buy, but devices that can be either attached to a person or affixed to other things that are reading activity about a person's overall health that can be early warning indicators of negative things that could be happening, especially folks with chronic conditions. I mean, that's just incredible to think that you could essentially intercept an issue before it even happens for somebody. And then the last really big advancement that I'm just uber excited about is really the artificial intelligence convergence into social health determinants. And what I mean by that is that, the industry has created this massive data pool about the people that it is treating. But what it's not doing is it's not reading in external data sources to help understand the background of those people that it's treating. And that is things as simple as, people's economic status, people's lifestyle, other things that are going on in their lives, and ultimately utilizing in an appropriate and non-Big Brother way, but appropriately utilizing public data that's available and things that people will allow themselves to tell you about to help help the provider and help the healthcare system know more about the individual that they're treating than what we otherwise would have known many, many years ago. So I think if you take all three of those things forward, it's going to be a really exciting 2020 and beyond. What I'm more concerned about is, hopefully, that these things go very well, and hopefully the people that are stewarding over the data and these new technologies, just do it appropriately.
And there is also a lot of talk at the moment about the rise of the experience economy. And a lot of people are saying that experiences have now become more important than even the product itself. So do you have any examples of how technology is also enhancing the patient experience through these improved payment processes?
Yeah, much so, Neil. So really a couple things. Our reason for existing, as a company, and the payment industry focus right now is really not just to get money from the consumer and give it to the people providing healthcare, but to really lower the friction and the stress on the consumer. What people don't realize and what the healthcare systems in the states and even the federal government is starting to pay attention to is not just the care that's given while somebody is physically in front of the healthcare provider, but the care that happens after the fact. So an example of our company having success and things that we've studied through surveying and other mechanisms is really how the payments industry is able to have a positive impact by making it easier for the consumer to meet them where they're at when they're ready to pay, and educating them why they need to pay and how to pay, and making it easy for them to do versus them having to worry about, being sent into a billing and collections process because they don't understand their bill. And there's a myriad of other technologies that are coming into the marketplace through the large tech companies that have their own versions of wallets. And as you watch them get into healthcare as well, that I think are going to take the whole payments side and just accelerate that in the years to come. And we're excited to be on the forefront of it.
And on this Daily Tech podcast, I love enjoying hearing about successful tech companies that are outside of Silicon Valley. And as a Milwaukee-based company, I'm curious, is there a big tech startup scene in the region? And is there anything that you'd like to shout about and help put Milwaukee on the map today? Because I think we do have people listening all over the world, and I get a real kick out of hearing about these different startup communities outside of the Bay Area.
Oh, yeah. No, thank you very much. So we could be considered another Bay Area company. We have a great lake called Lake Michigan that that Milwaukee is attached to. And Milwaukee is really at the geocenter of a number of major cities here in the U.S. between Chicago, Minneapolis, St. Paul, Madison, Wisconsin, which is where our state capital is, and our major state university is located out of. And what's really been happening over the past few years since I've been on the tech scene and also as a part of leading our company is that angel networks and educational institutions and private enterprise have finally started to come together and put what I would consider to be major money into the marketplace to fund angel networks and investor and generator type of activities. Madison, Wisconsin is home to a number of really great startups in the healthcare technology space. And while I won't name those companies, they're major ones in the EHR and the EMR space. Milwaukee, Wisconsin has a number of retail organizations that are both financially oriented as well as true consumer retail focused that are also just starting to really develop tech startups. And luckily, we have some great schools in our backyard as well that are actually creating programs starting in all places in middle school, which for us is grades 5, 6, and 7, that are already starting to talk about kids and those institutions about how they can actually have a really cool career doing great things using technology as a part of any company, but most certainly as a part of a technology startup company as they come through high school and then into secondary education. So I'm really high on our marketplace, so much so that I've passed up opportunities to leave here to go do other companies because I believe here we have a great talent opportunity as we go forward and a great money opportunity as well to support the talent that exists and that's coming.
I love that. And looking towards the future, what's next for HPS and how are you going to continue to leverage this emerging healthcare technology that we're seeing?
Great question, and thank you for asking that. Ours is most certainly one of national growth, and you've heard me tongue-in-cheek be a little bit critical about some of the major players that are in the healthcare ecosystem, especially the big insurance companies, especially the ones that are publicly held and traded on, the NASDAQ or the New York Stock Exchange and things. I mean, they are so focused on large stock price. It's so interesting, but we have ways to help them be better. And our company, as it's going to continue to grow, is that I think as we move forward, those that we're critical of, we will ultimately be trying to partner with to try and change the dynamic on behalf of the consumer and just help that consumer by getting into as many ecosystems as we can to bring them understanding and help them pay for their medical bills for what they actually owe. And that's exciting. It's going to take a small to mid-size organization and grow us on a national venue and potentially even internationally in the years to come.
And there's so many talking points there. So for everyone listening that have maybe left with a few more questions after listening to our conversation, can I ask that you just point them in the direction of how they can find you online and also contact a member of your team if they're left with any questions? Oh,
sure. I love speaking with people personally. I'm huge on the soapbox about healthcare and things we can do to make it different. So just reach out to me at Terry, Terry, at hps.md. And our website is just www.hps.md, and you'll be able to get to our team and myself.
Well, thanks so much for coming on the show today. There's for a number of reasons I've absolutely loved it. One, I've learned so much about the US healthcare system, and I've got a much better understanding of it now, but also the emerging tech and how it's transforming that space. So I've learned so much today, and I cannot thank you enough for coming on. And hopefully we'll get to meet when I'm in Chicago or next time I'm in the US. But more than anything, just a big thank you for taking the time out of your day to speak with me today.
Thank you so much, Neil, and thanks to your audience as well. And Happy New Year.
For me, this episode was in two parts. One, it helped me understand the healthcare landscape in the US so much more and try to get to grips with the basic of stop-loss insurance, when to encourage clients to use level funding, and also reducing costs with self-funding plans. But as I said to Terry, this is a tech show also, so I think that was vital to set the scene. But also, to having got that knowledge, to then understand the emerging healthcare technology and enable Terry to provide insights on how emerging healthcare technology trends can also enhance the patient experience through improved payment processes. And of course, the startup scene in Milwaukee, because I am a big fan of getting all these startup stories shared from all over the world, not just outside the Bay Area and other areas of the US, but in the last year alone, we've had Tel Aviv, Moscow, Lithuania, China, Hong Kong, Singapore. And it's just, for me, it's proof that technology works best when it brings people together and helps us share these stories around the world. But I am one of life's dreamers. So a huge thank you to Terry for his patience and explaining everything in a language that we can all understand today. But over to you. If you've got anything you'd like to add to today's conversation, or you've just got a question for me, please email me techblogwriter@outlook.com or tweet me at Neil C. Hughes. And remember, if you'd like to work with me, if you want to launch your own podcast, or you need to outsource your business blogs or tech thought leadership posts, pop by my website, techblogwriter.co.uk. So I hope you enjoyed today's episode as much as I did, and I'll join you again tomorrow with another great guest from another industry. So thanks for listening, and until next time, don't be a stranger.
Thank you for listening to the Tech Talks Daily Podcast with Neil C. Hughes. Remember, technology works best when it brings people together.